Alright guys, thanks for tuning in. This is the part 2 video of my Friday trade. Sorry I didn't really even get into the trades that I took on Friday the last video because I was rambling on about some nonsense. Bear with me, I'm new at this, so I'm going to try to get better and get more to the point, get things more a little cut and dry for y'all. Alright, so going back to the first trade that I took on Kron, just something dawned on me I wanted to share. Now, we looked at the 1 year chart earlier on Kron. Yeah, it looks nuts. Shooting straight up, parabolic move. But you know what? I didn't even, I don't even think I really took this into consideration when I was trading on Friday. I just saw the price action at 10 o'clock and saw a flag that I liked and I jumped in on it. That's all I did because, like I said, I was watching my swing trades in NVDA and therefore I was really focused on NVDA in the market for the most part there. So I hopped in on this trade with no game plan on Kron and I wasn't even really see how extended it was. I mean, it was just completely straight up. So jumped. That's mistake number one right there that I made. Alright, then let's go take a closer look. So, my trades. So, actually, let me get over to. Alright, guys, we got the 1 minute and 5 minute chart on here on Kron, and we're going to get into the trades here. So, the first trade, this is the 1 minute on the right, the 1 minute chart. If you're not familiar with when the time frames when we talk about the charts, when we say any time frame, 1 minute, 5 minute, 1 hour, 15 minute, whatever that time is, that time is referring to the candlestick. For each candlestick, that is the time frame from the open to the close of a candlestick. So this is the 1 minute chart. Look up here, you can see 1 minute. Each candlestick is 1 minute time. This is the open. If it's a red candlestick going down, that price is low, the closing price is lower than the previous candlestick, and it's red, that means this is the open, this is the close, and that's 1 minute. And in between that, the wicks, any wicks that you see, like opposite on the green candlestick, the bottom is the open, the top is the close. Any wicks are the highs and the lows and the highs. And the body is the close. Okay, so that's 1 minute, and over here on this side we have 5 minutes. So each one of these candlesticks will represent 5 minutes. Okay, now let's get into the trades. So my first trade was 1003 plus 200 shares, 2104 at the V bounce of VWAP. I have written down here that the market was making a higher low on the 1 minute chart. So 1004, I bought on this candlestick at 2104. So 2104 is where I bought, which is right here. Okay, and the 5 minute chart, that would be right here. Long 200 shares. Long 200 shares. So as a rule of thumb, your max loss should be no more than 2% of your entire account size. Now, it can be more, it can be less. That's just what some people say, and for most people, it's a lot more because um, I'm not going to get into too much detail, but for reasons I even on my paper trading, I like to more or less, and in real life, I'm trading with about $3,000 worth of max money. So 1% of $3,000 is $30. 2% would be $60. Um, that's the most that. Let me rephrase that about the max. That's the most that you want to risk on any position at any time is the 1 to 2% rule. And then for a total account, some people say 5 to 10%. So that would be like your max daily loss, I guess, would be 5%. But you can risk 1 to 2% on your position. So for me, 2% is $60. Now, day trading, that's not very much room to play with at all. I mean, if you're max, so yeah, but that's my goal. I don't want to lose any more than $60 on one position, and um, no more than $120, $150 in a day max. So those are my parameters now. I've lost thousands in a day before, so these are my new rules that I'm trying to stick to. Um, Now, with that being said, I can't expect to, and nobody can, if you set your max loss at $60, I mean, naturally, your max win is going to be hopefully $120 because you want to always have a 2-to-1 at least risk to reward ratio. So let's just apply this to this trade and see if I stuck to it or not. So the Cron trade, I bought 200 shares at 2104. The VWAP, and so right then I should have set my stop loss in my mind. So 2104 is my entry. You can see there's a support level with the VWAP where it consolidated the vol for y'all. So for y'all who do not know what a VWAP is, the volume weighted average price, and it's one of the most reliable indicators because it takes into account not only the price traded, which the moving averages do, all these colored lines here, but also the amount of shares traded at that price. So it moves based on if there's more shares traded in a certain price level, it'll be more weighted towards that to go to that price level. So it's more accurate and effectively indicating where the demand is for a stock, because the higher amount of shares traded, the more significant the level. So it takes into volume, just like these bars down here all indicate volume. Volume is one of the biggest indicators, and I'm thinking about taking some of these moving averages off because you don't always use these, but I haven't yet because they do help when you are trying to identify an area of to set a stop loss at that makes sense, because you always want to set a stop loss that makes sense. So which brings us back to my stop loss. So my stop loss must, on this trade where I bought right here at 2104, my stop loss had to have been a break below or a close below VWAP, because anything stop loss above that is just cutting myself short and exposing myself to too much risk, because it's highly likely that it will come back down and test this, and until it breaks through it, I'm safe. I mean, because that shows institutional traders, the big banks, if a stock's in demand, a big bank will buy at the VWAP, and and they'll sell at the VWAP it is if it's not in demand, and they think that, and they don't want it because they think it's going to go down in the future. So the VWAP is always a good entry point, no matter which way the stock's going, whether you're trying to go long or go short. Because if so, and likewise, if you're trying to get a reversal play farther away from the VWAP, is a good point too, because no matter which way the stock's going, the institutional traders are going to take profits when it goes further away from the VWAP, because they get paid commissions, because that's a good trade for them. That's how they base their trades on. That's how the traders that trade the big money get paid, is based off the VWAP. So, under the VWAP would have been my stop loss. So, $21.04. A break under the VWAP would have been let's say 20.85. So, it's 15 cents plus, it's 19-cent stop loss on let's just call it 20 cents on 200 shares. That's $40, because if it was 100 shares times 20 cents, it would be $20. So it's 200 shares, so it would be a $40 max loss there. And I took profits 100 shares off at 21.25. Now, looking on that trade, I don't like that, because even though I locked in $20 in profit, my risk was also $20. So that's only a 1-to-1 risk reward because I'm taking profits off early there. And then I waited, see, and then we got another move here. And as you can see on the 5-minute, I'm just in a bull flag right here. I'm just in a consolidation area, and I'm taking profits. I mean, if I had, that's the other thing. Your strategy has to change on your size of your shares. So if I had more shares and I had thousands, yeah, it'd be different. If I had 2,000 shares, it'd be different. It'd be $400. So that's one thing. But with 20 shares, I really need to be letting this ride here. I need to take it off. Again, I need to be taking out here or taking my first 100 off up here at 49. And getting into the next trade, we took 200 shares here at 21.18, held to a little consolidation area. Now, I guess my stop loss would have been the same there, so I would have been risking now even more. That's not a good trade. And once again, guys, this is Kron. This thing is at its peak. I mean, I bought after this massive drop, and we were already in we showed the daily. I'm not going back to it now, but that's stupid. That was my mistake. Why would I do that? But at the same time, yeah, I got off with a little trade here. And yeah. These are little scalp plays. So I sold out early on this one and then on the back side of this one. So I actually took a loss here. I should have stopped out at 21.53. That's the other thing. If you take profit up here, you gotta be able to. No, this was my entry down here. So yeah, it was good. That was a good move there. I don't know. Overall, so I made like $100, $100 something on those trades. So, and then the next trades that I took were NVDA, so NVIDIA, I only took 50 shares of this with a stop at the VWAP, so $145.55. That was my entry. Okay, the VWAP was 40 at 144.99, so 56 cents away. So yeah, I was risking $50. Oh, I went long 100 shares here. So yeah, that would be a $50 risk. That was alright. That was within my parameters of my 2% max loss a day. $60. So, or I mean on a trade. So long here, and as you can see, I got stopped out, but just barely. And see, why would I shake out there? I mean, my stop loss was at 50 cents at the VWAP, 50 cents away. That's why I only took 100 shares, and I still shook out early. No reason to shake out there early, guys. Uh, just gotta stick with that trade next time, or just don't even have taken the trade in the first place if you don't have confidence in your stop loss. The next trade later on in the day, around 2 o'clock. So the market is just 5 is selling off, and I thought it'd be a good value buy at the stop at the VWAP, which turned out not to be a good idea. So I bought just under the VWAP, and it bounced up and rejected back off, and I sold. And I have right down here for this trade, I went long 200 shares at $145.25. My stop loss was 25 cents stop loss, so that'd be 145 even, which where I would have to sell, which was, I guess I was using the whole number as an area. So I actually stopped out lower than that. So I didn't adhere to my stop loss. I lost more money. I lost like 70 or 80 bucks. So that was